Hi, and welcome to this New Year edition of the Economic Preparation and Recession channel. I'm your host, Tony. Thank you so much for joining me. We've made it to 2021. Most of us have, in one piece. And for those that did not make it to 2021, our prayers and thoughts are out for those families and friends. Today, I just briefly wanted to come on and share with you some information about the continued struggle of the home sales and housing market, as well as we're going to talk about the consumer confidence that's waning as the pandemic or the continues to ravage the economy. November new home sales fell more than expected, and the builder stocks began to drop. As you remember, in the past couple of months, they've been saying that prices of materials, raw materials like lumber and copper, were increasing in price, and so a lot of the major home builders like D.R. Horton, K. Hovavalin Homes, um, KB Builders, Homes, etc., were saying that they were having to raise the prices on all because the cost of durable goods was going up. So new home sales fell 11% in November from October, according to the U.S. Census. October's reading was also revised lower. Sales hit an annualized rate of 841,000, down from 979,000 in July, but sales were still up about 20% year over year. So now we have this glut of new homes on the market that builders, some of the biggest names such as Lennar, Pulte Homes, D.R. Horton, Toll Brothers, dropped more than 2%. Their shares in the stock market dropped more than 2% when this news came out. According to the report, they're saying that the pullback may be due to prices which have been rising steadily. Home prices have been rising steadily in all parts of the country, from the west to the southwest to the northeast to the east to the midwest. And the median price of a newly built single-family home rose 2.2%, up to $335,300. That's the average price for a new single-family built home in the United States, no matter where you're at in the country. And I can attest to this because I was in the South. I believe, I don't know, must have been about a week or two ago, just traveling with some family and friends, and I would see a new subdivision out in the field, and it would say, oh, such and such, starting in the low 280s or 270s, right? So I would get there and I would call the person, just checking on things. I would call them up, and they would say, "Well, sir, that's actually the bare minimum. That's the starting price for the lot, the parcel. The actual starting price for everything included is up to 325, 330." I said, "Oh, well, I just saw a sign that said that this is starting in 280, so that's a pretty good price." So apparently that is true. The new average home price in America now is at $335,300. That's with everything included. Whether or not you are financing or buying it cash. So affordability continues to remain a challenge, especially in the entry-level homes market. Those priced below $200,000 only accounts for 2% of total sales. This is according to Mr. George Retu, senior economist at Realtor.com. He says these numbers reflected the slowing economy, rising unemployment claims, and growing affordability challenge, which hampered activity despite record low mortgage rates. So we have a kind of conundrum here where we have record low mortgage rates hovering around 2.7% for the 30-year mortgage out there. But we have an affordability problem for the younger generation, the Generation X, the Millennials, the Generation Y, because the salaries are not keeping up with the price of inflation overall, and the inflated prices of the houses are inflated because the supply is limited, because they're purposely limited in supply. The banks, the hedge funds come in and buy up all these foreclosed homes so they can afford to sit on it for years until the market recovers, and then sell it at a double price, double the interest and double the price to make their money, triple money back. That's what they're doing. But for the houses that do remain out there on the market, and according to the new family, the income is just not there, especially with people losing their jobs. Most people don't know if they're going to have a job day by day in the public sector or the private sector. Even if you're self-employed, you don't know if you're going to have that many customers to sustain yourself on the internet or else. And so, we have over 40 million unemployed still. We have a slowing economy. We're going into a double-dip recession, as I mentioned in the last video. And now we have this affordability challenge that's not just affecting housing, but it's going to be affecting food and utility costs, as you're going to see those prices go up. And you're going to see less and less on the shelves of the grocery stores. as continue to go through this crisis that we're in. And so this is just going to be an unbelievable perfect storm that's just getting started this year. We're going to start seeing things unravel in the housing market and the credit market. It's going to be next to fall. These two things is what's keeping the American economy going right now. The housing market and the credit market, or the bond market, some people would say. So we're going to keep a close eye on that as we go through the first quarter of 2021. Definitely recessionary pressures are here. Also, U.S. consumer confidence stumbles as this pandemic rages on. Now, that's something that you and I have been talking about. Not surprising to us. You can't be confident in a dollar, the index that has dropped to $89 now. The U.S. dollar is under extreme pressure. Because they're printing it to oblivion, to infinity. Now, mind you, look, I'll take whatever they can give me. If they want to give me a $600 stimulus check, by all means, send it to my account, or $1,200 or whatever. Send it. I think nobody will turn down a couple of free greenbacks at this point. But the issue is that your purchasing power is dropping. The consumer confidence index, the CCI, dropped to a reading of 88.6 this month. Now, this is the lowest level since August, from 92.9 in November. A lot of the older listeners may remember the savings and loan crisis that took place in the 80s. That is exactly what's going to happen here. And because consumer confidence is dropping, we can expect coming up this summer bank runs and a lot of bank failures to be happening. And this could be intentional because there's going to be consolidation in the banking world. And, instead of having all these major banks, we're only going to have one or two major banks. And the rest of the banks are going to fold under the liquidity crisis. Because remember, that's what got started. That's what one of the things that started this whole thing was that the repo market, this is before the pandemic, the repo market blew up in September. And that's when the Federal Reserve Bank had to inject trillions of dollars into this thing just to keep it breathing up. So this is what's going to happen this time is they're going to let the banks, they're going to shut down the lending because Treasury Secretary Steve Mnuchin doesn't like all this PPP loans and all of these things going out. He's going to shut off the lending between these banks. And a lot of these banks are just going to go under. So that's what we have to look forward to in the second quarter of 2021 after we go into this recession right now, after our next president gets into office on the 20th. That's when this economy is just going to start going downhill at a historic pace. So be on the lookout for that. The storm clouds are growing darker and darker. Consumer confidence has dropped. Most people are now in the mode of survival or saving money or getting their prep supplies, getting what they need to be in this for the long haul, because this is just the beginning. Ray Dalio, Peter Schiff, and others have said that it's going to take at least 10 to 12 years to get out of this Great Depression that we're in, and totally agree. So, it's going to take we're in this for the long haul, regardless if the sickness thing gets handled completely or not. We're in this for the long haul because the economy is just in so much bad shape because we are $28 trillion in debt, and we have no one to borrow money from at this time. That's why they're printing money. And so we are in just totally bad shape. But the good news is we have time to prepare in the next couple of months. And we have time to kind of brace ourselves for those things and to cut down on our standard of living. Because so we won't be as shocked as others who are going to just see everything evaporate in a matter of months. So that's the blessing that we have. That we have to be strong for our families. We have to continue to prepare because we knew that this was coming years ago. But, they printed over money and we thought everything was okay. But now we see things are not changing. They're just calling it different names. They're blaming the slump on different things. Oh, it was because of the sickness. Oh, it was because we printed up money that we didn't print enough money to give to the people. Oh, it's because the businesses. Remember now, the money that they're giving to the small businesses, right? That money is in the form of loans. That money has to be paid back at some point. So let's say the sickness ends and all that ends. The small businesses are still on the hook for that money to pay back all these loans they're getting. If they cannot pay back, then the government seizes their business, seizes their property, and that's it. And that's exactly what's going to happen because we're only going to have a few big players, the big four, Walmart, Amazon, Target, Google, Microsoft, Facebook, stuff like that. We're not going to have all these other companies in the next new economy, in the new world order economy. This is what is going to be happening here. So continue to prepare, continue to walk close to God, continue to, think about different things because eventually all of the circus is going to come to end. So once you get your stimulus, continue to use it on a wisely basis, use it to prepare, whether that's food, water, medicine, long-term supplies, things that are going to be assets to you, assets to other people, And so when the people come begging or knocking on your door, you can barter with those goods. When when the dollar crashes, like in Venezuela, we can actually have physical barter things to barter with. But if you don't prepare and you don't get things to barter with, well, guess what? You're not going to be able to survive when you can't go to the grocery store. When they tell you, look, you can only go to the grocery store between 6 a.m. and noon. After that, nobody can get in because of the pandemic or whatever's going on. Look, you're out of luck. So make sure you continue to prepare because it's coming rapidly. Supply chain disruptions are coming this year. As a matter of fact, this summer is coming. We're going to see more supply chain disruptions. Might even see power disruptions later on this year, later on toward wintertime, or some other black swan event that's coming, because this year is going to be absolutely more. People think because they flipped the calendar switch to 2021, everything is going to magically go back to normal. That's not the case, unfortunately. But we're blessed to be here, and we got to make the best of what we have. So stay blessed, my friends. Leave any comments down below. Thank you very much for joining me on this brief New Year's Day edition. Have a safe New Year's and be blessed. Take care. Bye-bye.